You've seen so many bull and bear markets. How bad do you think it can get this time?
This is the battle between fear and FOMO. If FPIs create fear among domestic investors, market is downside. If we create FOMO among global investors, there will be more upside.
On today's episode of The Money Mindset, we have none other than Nilesh Shah, the Managing Director of Kotak Mahindra AMC. And today, he's here to discuss the current market situation, which, as we know, is not great.
In India, whatever you say opposite is also true. In our building in BKC, when someone comes extra bearish on India, we just open the curtain and show them Geo Center and say, look, the world's most expensive wedding happened over there. And your country's HNIs were dancing in Bharat over there. So don't be so bearish. Then we take them to the next corner, open the curtain and show Dharavi slum. Saying, देख भाई, हमारे यहाँ पे world की largest slum है. In the same building, I can make someone bullish, I can make someone bearish.
Do you believe that India is lagging in a big way, or is it just my bias?
So there are certain...
What do you think the government needs to do to kickstart corporate earnings?
We also have to end Inspector Raj. Today there are so many rules, regulation which an entrepreneur has to face. We need to rationalize them. While we need to protect labor and environment and so on and so forth, it should not come at the cost of entrepreneurship.
But do you think that we could be in a very painful, very frustrating sort of time and price-wise correction for maybe a year or two?
A lot.
Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hey guys, on today's episode of The Money Mindset, we have none other than Nilesh Shah, the Managing Director of Kotak Mahindra AMC. Nilesh has over 25 years of experience in the capital markets. He's watched several bull and bear markets, and today he's here to discuss the current market situation, which, as we know, is not great. We have been in a time correction since September of last year with large foreign investors selling, and suddenly India is not the flavor of the season anymore. So what went wrong? What's the way forward? We talk about that today. Nilesh, thank you so much for joining us.
Thank you, Sonia, for having me here.
It's a tricky time, right? Everyone's sort of like in a flux because of the way the market has been. But I wanted to understand from your lens, you've seen so many bull and bear markets. How bad do you think it can get this time?
So undoubtedly, I will say right now there is a battle between fear and FOMO. The fear is being created by FPIs. They are saying that, look, for last 1 year, your market has not delivered any return. Last 5 quarter, earnings have grown at like single digit. Your valuations are at a premium to peer group and you are underperforming. And geopolitically, you are getting hammered. So it's time for you to sell. The domestic institutional investors are saying that, yes, whatever you have said is absolute truth. No debate about it. But look at the long-term story. We are expensive on a 1-year basis, but we are the cheapest on a 5-year basis. Last 5 quarter earnings growth is single digit, but we have potential to deliver double digit. And we will be the fastest growing major economy in the world with reasonably good earnings growth, with reasonably good valuation. So it is time for you to book your ticket rather than stay out. This is the battle between fear and FOMO. If FPIs create fear among domestic investors, market is downside. If we create FOMO among global investors, there will be more upside.
So, when we started, when you walked in, you told me that this has been one of the most challenging times for you, both personally and professionally. Of course, personally, you've gone through a lot as well, and I'm so glad that you're out of it. But professionally, why would you say that? Is it because of how volatile the market has been? Is it because things are changing every day? Because this is a sense I get from a lot of people that I speak to.
So professionally, we rarely go wrong in both markets. This time we have gone wrong on both the markets. We expected yields to come down. Actually, yields went up. In equity market, we were expecting more correction and markets held on quite reasonably well. On top of it, you are seeing policy changes coming through. from President Trump. I mean, as someone said, Don ko samajhna mushkil hi nahi, namumkin bhi hai. So that kind of geopolitical upheaval we haven't seen. This kind of volatility we have seen, but every time you go through that, it is challenging. The only call which has gone right for us is precious metal. We were bullish gold since COVID time, except 2021 where gold gave a negative return. By and large, that overweight call has worked. We became positive silver somewhere about 8 months ago. That also worked out well. So overall, this is a challenging time. Uh, and I think with the current geopolitical scenario, the challenges may continue for some time.
It's been phenomenal, right? The rise that we've seen in gold. And as you said, you got that call bang on. But for someone who's missed out on the gold rally entirely, not just gold, even silver, is there more to go?
I will say it is not yet late to enter into both gold and silver. On gold, the primary call is central banks becoming like Indian housewife. एक बार सोना खरीद लिया फिर बेचेंगे नहीं. The world doesn't have enough gold for Indian housewife and central banks. We believe China at some point of time would like to have more gold than what US today has. China is at about 2,500 tons of gold. US is at 8,000 tons of gold. China won't be able to buy more than 500, 600 tons of gold a year. Effectively, you can imagine what kind of buying power will be there with central banks, and that will keep gold prices high. On the silver side, while there is industrial demand from solar cell electric vehicle and the supply is getting constraints because of higher mining cost, we are also seeing first dabbling by central banks in silver. Saudi Arabian central bank front bought some silver ETF. Now, if central banks come to buy silver, the upside could be far higher. So overall, we believe in today's geopolitical uncertainty and dollar weakening trade, both gold and silver can be kept in your portfolio.
So, what percentage should one keep in their portfolio? If you had to do asset allocation now for the new year, would you raise your percentage of precious metals, gold and silver? And if yes, what should the ideal percentage be?
So there's no way to identify fair value of gold and silver. It's essentially a front running for the central bank intervention. We believe with current geopolitical scenario, every central bank would like to keep part of their FX reserves in gold and silver. Western world central banks like Germany, US, Portugal, they have more than 60-70% of their FX reserves in gold. The Eastern world central banks like China, India has less than 10% in gold. That gap will get bridged over a period of time, and which is why one can be bullish gold and silver. Undoubtedly, they are commodity, they'll go up and down. So my recommendation is that maybe 15 to 20% of your portfolio in gold and silver.
Okay, 15 to 20% of your portfolio. But it's really, I mean, it's really crazy. I have never seen in my investing, journey this kind of phenomenal rise, every day record high. So I guess something is changing in the ecosystem.
We haven't seen a dawn also.
Fair enough, fair enough. But coming to the markets, right? This has been a year of nothingness. Like since September of last year, this market has done absolutely nothing. If anything, it's actually fallen 15% and sort of come back from there. So give and take, very flat time correction in the market. Do you think it could get much worse before it gets better?
So one thing which off late has been taking some parts of my time is a derating of a company or a country. History has taught us that mighty fall. Eastman Kodak had oligopoly on films, and today the company barely exists. Nokia had 50% market share in 2007. They had $150 billion market cap, and today they virtually don't exist. Mighty companies have failed in the past. Now, I don't think so. There is anyone who has doubt on India's earnings trajectory. Nifty is likely to have about 1200 rupee EPS for FY27. Will it one day become 2000? Answer is yes. Someone will say it may happen early, someone will say it may happen later, but it will happen for sure. The challenge is that will we be able to maintain our P ratio at 20? 1200 into 20 is 24,000 Nifty. What if we go to 2000 earning per share, which is certain, but my P ratio comes down to 12? Then Nifty will be still 24,000. A lot of focus has gone into earnings, but I think it is time where not only India, but India Inc. also focuses on maintaining this premium valuation. We should not become Nokia. We should not become Eastman Kodak.
I'm glad you brought that point out because something is going wrong in the India story. Now, I find it hard to pinpoint what it is, and I keep asking this question that where has India gone wrong? If you compare it to, say, world leaders or even countries like, say, a Singapore or a Dubai or a Luxembourg or any place, right, where there are a lot of IFCs, financial centers, etc., India is still lagging behind in a big way. What has gone wrong and what do we need to fix?
So there are multiple things. But if we pick,
First, do you believe that India is lagging in a big way, or is it just my bias?
so there are certain areas in which we are lagging. For example, perception management. I was recently in Singapore and met not only Singaporeans but also Indians who are based in Singapore. And many of them believed that Operation Sindoor was a drawn match. India and Pakistan were even. Now, this happened just 3 months back or 4 months back in the month of May. If you had read Indian papers, you will know exactly what had happened. If you had read independent press, you will know what had happened. But by reading some of the biased reports, not only the Singaporeans but also the Indians in Singapore carried different perception. I think clearly we are not good in managing perceptions,
In selling our story.
in selling our story. And it's not just the government. Look at Indians also. Uh, Recently, I asked in one of the WhatsApp group how many people know about Luna, and everyone came back saying that TVS moped. And I said, no, I'm talking about deep tech Luna. No one was aware. Their YouTube video had got just 200 views when I saw it for the first time. So not many people were aware outside. This is India's DeepSeek kind of movement. In less than $1 million, we have created a voice AI, which is better than what is available in entire world today. OpenAI would have spent billions of dollars to create a voice AI. And a startup in India has created voice AI, which is better than that with just $1 million. As an Indian, we should be proud of it. As an Indian, we should be tom-tomming about it. As an Indian, we should be circulating like this is DeepSeek. More Indians have circulated DeepSeek news than they have circulated about Luna. Somewhere managing perception is the real challenge. It's not that we don't have weaknesses, but other countries also have that. When there is waterlogging in Mumbai, everyone starts putting photos on social media. There was waterlogging in many other parts of the world, including in Hong Kong, where in a five-star hotel you saw the video of water guessing. How many Hong Kong citizens go and put such things on their social media? So somewhere, while we have our weaknesses which we must focus upon, we also need to focus upon perception management.
Fair enough. Perception management is one thing, but there is also this whole argument of the fact that India, has for long been only a service nation, right? It has failed to move to a product nation. And we've spoken about this as
Yeah,
well,
yeah.
as to how now Indians are looking to sort of invest in technology or build product. I mean, Zoho has recently created a whole suite of products which is equivalent to what Google is doing. And, if they scale up, it may do much better as well. But do you think we're at an inflection point? Do you think that the government needs to step in a lot more? Where are the gaps that need to be filled?
So the biggest gap is retention of talent. Uh, there's this story about Professor Arogyaswamy Paulraj, worked in Indian Navy for 2.5 decades, created India's indigenous sonar system, which Navy today also uses. Uh, he retired from Navy, went on to set up three advanced centers in India, one on computing, one on artificial intelligence, one on military technology. But by end 80s, early 90s, he was so much troubled by the ecosystem and bureaucracy that he left India, joined Stanford for study, became professor over there, and invented MIMO technology, which is multiple input, multiple output. That MIMO technology created the base for 3G, 4G, and LTE. Now, if that talent was here in India, we could have benefited. By exporting our talent, we now are dependent upon Western world for those technologies. We now have become indigenous on 4G technology and 5G technology, but that's after many decades. So one, we need to ensure that talent stays in India. Talent also requires ecosystem. Many people still believe that if that talent had stayed back in India, would they have succeeded? Who knows? So we must develop ecosystem, and this is where government has done a good job. They have created 1 lakh crore fund for research and development. There are more allocations also coming from R&D. There's also vertical integration coming about sharing of research. Today, what one IIT does, the other IIT probably doesn't know. So there will be vertical integration of knowledge sharing. These are all appropriate things. But I'm saying that what I can do as an investor, uh, Sonia, by and large, we are focused on the return on investment, return on equity. We haven't done as good a job as one would like on about sustainability of earnings growth. Are you investing enough for the future? Are you investing enough for creating innovation which will sustain your revenue growth, earnings growth in the days to come? I think it is time investors starts balancing between investment for future, investment for innovation, vis-a-vis short-term return on equity. A mindset change is necessary whereby we can create ecosystem where money will be available both at corporate level and market level and government level to carry out research and development on innovation. That over a period of time will build our manufacturing base.
So R&D on innovation is the need of the hour.
Absolutely.
And that would help you sort of build a manufacturing base across industries is what you're talking about. So
Absolutely.
the mindset shift of corporates where they've been focusing so much on, say, being a service oriented and giving back in terms of buybacks or dividends, and now to channelize that money into R&D with support from the government.
Absolutely.
Got it. But you said retention of talent is a big gap in India. The problem also arises when you have now AI, you have, mass layoffs that are happening across industries. I mean, recently there were talks of TCS laying off big time. Of course, the rumors were quashed by the management, but this just goes to show that AI related automation is real. So, and there is another big issue of a job crisis. I mean, we will have a large population that may not have jobs enough to to grow. So what happens in such a situation?
So one, when typewriter got replaced by computer, typist job disappeared. But there were far more computer jobs available. When 91 liberalization came, many old economy business in textiles, chemicals disappeared. But many new economy business in telecom, media, information technology prospered. So disruption is way of life. Like in our culture, we say Brahma creates, Vishnu maintains, and Shiva destroys. The same creation and destruction cycle is played out in technology and in country. I think there is an opportunity for us to leverage AI. We haven't created LLMs. It's like a highway. We don't have highway, we won't be able to collect toll charges. But I can still run public transport service on those highway where I will have to pay the toll to the highway creator, but I will collect enough revenue from the passengers to travel on my public transport. That collection could be far more than the toll I am paying, and I can still make money. We went to meet a BPO company and asked him, like, will AI replace all the BPO employees? And he said, no, right now I'm using AI to get jobs from Eastern Europe and Philippines. Earlier we were only servicing English speaking population. Now I'm able to service French, German, Spanish speaking population. Suddenly, by keeping a mindset that I can leverage AI to deliver cheaper, better, faster solutions to customer, they have been able to grow their business. They are recruiting people, they are not retrenching people. And very recently in Singapore, I met someone who said that in Philippines, BPO business is showing a lot of disruption. And then I could confirm what my friend was telling me. So it's all about the mindset. If you keep typewriter and typist mindset, you are going to be a loser. If you accept computer and start working on new jobs which will come because of computer, you can still be a winner. For Indian IT services company, enterprise AI will be a big business. Today, to leverage AI, you need data. How many companies have their data in right place? That will require human intervention. Second, once your data is arranged properly and you're applying AI onto it, you would like to keep it secured. There will be so much of cybersecurity risk. Again, Indian IT services company will play a role. If we leverage AI, we will be able to deliver cheaper, better, faster solutions to customers. And we will grab business from other countries. So it's all about the mindset.
So, where do you see Indian IT companies 5 years from now? And is that an opportunity for investors now, or would you be cautious?
So my feeling is that the boys will be separated from the men's. There are many mid-cap IT companies where we have investment. They are growing better or faster than the large-cap IT companies. They are training their manpower on the artificial intelligence side. They are able to leverage AI to deliver cheaper, better, faster solution. And many of them earlier were not becoming part of the big boys club, unless until you had a size people were not willing to outsource contract. Now because of their costing, because of their speed, they are getting a sit on the big boys club. So my feeling is that again the mindset will make the difference. If you are trying to train your manpower for leveraging AI and reaching out to customer with better solutions, after 5 years you will be in a different club.
Hmm. Interesting. So mid cap tech could do better than large cap, but it's very case by case depending on which
Yes,
companies innovate, invest in R&D,
absolutely.
and move forward. Okay. So coming back to the India story, right? At the end of the day, every bull market is the bedrock of every bull market is improvement in corporate earnings, and that's something that we haven't seen for a while. What do you think are the 2 or 3 things that are needed right now for corporate earnings to improve? In terms of, say, reforms or, say, any government measures or something? I mean, we've spoken about, of course, what the corporate should do, but what do you think the government needs to do to kickstart corporate earnings?
So in terms of margin, I think corporate margins are at reasonably high level. There's no point in becoming greedy and expand margin from current level. Uh, if at all, our only option is to increase the volume, and which is what government has already taken steps. There is income tax rebate given to taxpayers of about 1 lakh crore annually. There is GST cut, which to the bottom of pyramid will give 2 lakh crore annually. This year it is only effective for 6 months, so about 1 lakh crore will come. Next year it could be 2 lakh crore. And from the top of the pyramid, 50,000 crore this year and 1 lakh crore next year will be taken out. But that's not going to impact your consumption. So overall, bottom of the pyramid annually will have 2 lakh crore more money in their pockets to spend. Interest rate cuts have been announced about a percentage point. That should again give about 1,20,000 crore in the pockets of borrowers. And finally, there is eighth pay commission coming into play. We don't know what the terms of eighth pay commission will be, but I'm sure it's going to put enough money in the pockets of government employees. Between tax rebate, GST rationalization, interest rate cut, and eighth pay commission, lot of money will be kept in the pockets of taxpayers, borrowers, consumers, and government employees. This money, if spent in India, will create the positive impact. If we go and spend this money in Singapore and Thailand and Vietnam, no impact on India. But if we spend this money within Indian product and Indian services, then there will be multiplier effect. Now, as consumption goes up and our capacity utilization is already at 75% plus, there will be need for private investment. This is where government has to step in terms of ease of doing business. Today, RBI monetary policy came. The one thing Honorable Governor talked about, rationalizing, harmonizing 9,000 odd regulations and compliances. Every regulator is doing that. If taken to its logical conclusion, it will improve ease of doing business. We also have to end Inspector Raj. Today, there are so many rules, regulation which an entrepreneur has to face, from weights and measurement act to all kinds of things. Uh, we need to rationalize them. While we need to protect labor and environment and so on and so forth, it should not come at the cost of entrepreneurship. So if government can deliver on ease of doing business further, the investment cycle will kick off. And this is where your R&D investment comes into play. Can we make products which other countries will require? It will have to be of quality, it will have to be of a lower cost. Combination of this consumption, investment, and innovation can create the virtuous cycle.
So, Nilesh, you said government has to step in to increase the ease of doing business and end the Inspector Raj. This is something that I faced. Recently, I was in Gift City in Gujarat. And I don't know if you've been there, but it is fabulous. Everything about Gift City is amazing, right? The infrastructure, the building, the way the banking system has evolved over there. But for some reason, companies are still reluctant to come there and set up social infrastructure because they speak about this, that the ease of doing business is something that's still not in their favor, or there is huge amount of taxation and regulation that's preventing them from putting large money to work there. But I wanted to understand from your end, have we made any progress on that front? Because these are conversations that we have every 5 years about, the government increasing the ease of doing business. But have we made any progress on ground?
So undoubtedly progress have been made. For example, getting a passport was a challenge a decade back. Today it's very, very easy. Uh, Wherever we have brought simplification, computerization, and checks and balances, public-private partnership, by and large things have improved. Uh, Yet there is a long distance to cover. Like we have National Commission for Women, for minorities, for kids, can we have National Commission for Ease of Doing Business? Any entrepreneur who is harassed by Inspector Raj should be able to lift the phone and communicate why a regulation is becoming a hindrance. Sometime back in Pune, there was a flour mill which had put 15 approvals on its wall. And the person who took that photograph, the question mark was, is it all or there is need for more? 15 approvals for running a flour mill. I met some hotelier and they said we need to take 60 approvals for starting a hotel. Can we create one window clearance in true sense? Can there be a 24/7 hotline where entrepreneurs can share their challenges, regulations which is hindering them? And then there could be a rationalization, harmonization. I think in many of the regulators like SEBI, RBI, IRDA, PFRDA, We have seen that kind of harmonization happening. They issue what is known as master circular. There is public consultation. There is also feedback mechanism. Those things by and large has worked pretty well. And today, if we see our mutual fund, our banking, our insurance, or our pension fund system, they are as good as what one can find in any other parts of the world. On manufacturing, we are unable to say that. When a weight and measurement act comes, how much public consultation is there? Who knows? What is the feedback mechanism? Is there a study which shows cost and benefit? If I remove this regulation, what will be the cost? What will be the benefit? If benefits are far outweighing cost, then maybe it's worth removing those regulations. So, what we are doing on SEBI, IRDA, RBI, PFRDA side, we need to do it on other regulatory side.
Fair enough. You said that there's a lot that the government has done already, right? Whether it is the income tax rebate, whether it's rate cuts, whether it's GST rationalization, the eighth pay commission. But still, the market is not reacting to all of this. Why do you think that is?
I think market was running ahead of its fundamentals. Uh, 1.5 year ago, it was still discounting double-digit earnings growth, and actual earnings growth came in single digit. You can't have 22 times forward valuation when your earnings growth is in mid-single digit.
So, do you think that this is a market that will test your patience for some more time? I mean, it's already been a year, but do you think that we could be in a very painful, very frustrating sort of time and price wise correction for maybe a year or
So
two?
a lot depends upon President Trump. If tomorrow US and India reaches a tariff deal, there will be relief rally in the market, there will be short covering. But if you are looking on a longer term basis, I think further re-rating of Indian market looks difficult. We are trading at 2021 times forward. I doubt it will go further up. And even if it goes up for a while, it won't sustain over there. So effectively now we are looking at earnings growth to deliver majority of our return. And this was the case in the past also. Last 5 years, broad market return is about 17%. Mid cap is about 23 and 25%, mid cap and small cap. But 15 years before that, market return was just 11%. And small cap underperformed with 7.5% return. Overall 20-year return is just 12%, which is more or less your earnings growth. So next 5 years, next 10 years, my feeling is that earnings growth will be your total return. And you'll have to focus on companies which are doing innovation. The market is rewarding innovation. Market is rewarding disruption. A new age company like Zomato has a bigger market cap than an old economy company like Tata Motors or Hindalco. It just shows market's mood right now. Now, of course, Zomato will have to deliver on earnings growth eventually. But today it shows that innovation will get you higher valuation.
So, if you believe that further re rating of India looks unlikely at this point in time, from an asset allocation standpoint, do you think that equities will now take a backseat for a while? And is it better to put your money at work in asset classes like, say, crypto, for example, right? Which is, I mean, it is picking up world over, let's be
Yeah.
honest. Is it something that we have missed out on entirely? And do you think that could be the place to park your money over the next
So,
year or two?
Sonia, you and I may not have invested in crypto, but about 20 crore Indians have dabbled in crypto and lost money. It's just that their stories are not visible. 30% of all the bitcoins issued have disappeared because of password forgetting or hard drive crash and so on and so forth. Now, if your float is going to come down, valuation will go up. There's no rocket science in it. My recommendation will be, if your risk permits, then certainly dabble in crypto. I really don't know how to value them, but there is always greater fool theory. But compared to equity, should you move into other asset classes? Precious metal, we talked about. There's performing credit. Today, you know, today RBI did announce some liberalization on banking system providing credit for acquisition and so on and so forth. But subject to that, performing credit AIF, where promoters are borrowing money for corporate restructuring, corporate acquisition, or giving exit to private equity, is a fairly lucrative market. My guess is that pre-tax returns in performing credit will be as much as a broad equity market, and the risk is far lower. The REIT InvIT, now obviously REIT InvIT won't give you as much return as an equity, but adjusted for the risk, it will be as good as equity. So in a customer's portfolio, investor's portfolio, please make space for precious metal, performing credit, REIT InvIT, and if you think even crypto.
I know you're saying that with, a very heavy heart because you don't believe in crypto.
No, I don't believe, but that doesn't mean that one should not invest. If your risk permits, go for it.
So tell me a little more about this performing credit AIFs. For a layman, for a retail investor, how do you participate?
So essentially, these are product for high net worth individuals with 1 crore minimum subscription. But today, there are many promoters, entrepreneurs who wants to increase stake in their company, who wants to buy out PE, who wants to do family settlement. They don't have access to a pool of funding. Banks are liberalized today, but yesterday they were not able to give. Mutual fund, insurance companies, pension fund could not give. The only option available to them was either a foreign investor, a foreign bank, or a performing credit AIF market. Deals were many, security was good, rates were high, and that's why performing credit became an attractive investment option. I believe there is a space in every HNI's portfolio for performing credit.
Okay, fair enough. Coming back to the market, there has been large FII selling as well, right? In the last 1 year. Is it largely because FIIs are just churning out of expensive markets and into cheaper markets, like say a South Korea or a China versus in India? So is it a tactical play, or do you think that the long-term structural story is changing for India?
So, whenever we have gone abroad, has anyone said no to us in terms of meeting? Answer is no. They are more than happy to meet and understand Indian market. So we are right there on the radar of every investor. Obviously, everyone wants a good valuation comfort to invest. But if we divide this FPI selling, active has sold, passive has been buyer or seller based on flows. Emerging market per se has not received substantial flows, and hence passive emerging market flows in India are little bit less. But by and large, active are seller, passive will behave as per the flow. Second, we are also seeing in secondary market there is selling, but primary market, whenever there is good IPO, QIP, OFS, FPIs are standing along with us. So they are buying in primary, selling in secondary. The third, what we are seeing is a reflection of the previous trend where they are buying kind of new economy and selling old economy. They are probably booking profit in banks, IT services, consumer staple, but moving into platforms, moving into new age company. So to paint entire FPIs with one brush will not be right. There are FPIs which are still looking to buy. There are FPIs which are still looking to sell.
But do you believe that this whole trend of moving money out of emerging markets into developed markets is something that could continue, or do you think it could reverse?
It will reverse substantially. The global ownership of US dollar assets across treasury, equity, and other is about $30 trillion. Dollar has depreciated 10%. DXY is down from 110 to 98. Now, of this $30 trillion assets, 10% is already gone. That's $3 trillion. Now, people haven't yet realized this and responded to it. But further depreciation and people will start taking money out. The valuation gap between emerging market and developed market, especially US, is also fairly large. So my feeling is that the dollar depreciation and the valuation gap will move money from US markets into emerging markets. Some money may go to China, some money will flow to India.
So, tell me your view on this whole talk of de-dollarization. I know it's a bit far-fetched as of now, but a lot of people are talking about, the soft power moving from the west to the east, and now with China increasing its reserves, its gold reserves as well, hedging against the dollar. Where do you think all of this is going, and where does India fit into this entire story?
So, as someone asked Larry Summers, what is an alternative to dollar? And he said, look, Japan is hospital, everyone is old. Europe is a museum, everyone is antique. And China is a jail. Once you go in, you never know when you will come out. So there's no alternative to dollar, and that will sustain dollar. To some extent, what Larry Summers mentioned is appropriate. Dollar is weakening, but there is no immediate alternative to dollar. Rising precious metal prices, rising crypto prices, and some amount of flows to emerging market are all reflection of weaker dollar, but there's no immediate substitution. My feeling is that as India, we should monetize the huge gold reserve which we have created. Gold is up about 1200 to 3600, $3,800 from COVID to now. That's almost 3 times jump. If we were having $1 trillion worth of gold, today it will be $3 trillion. What are we doing with this gold reserve? Can we monetize it? Today is the time probably to sell our accumulated gold from a country point of view, not from an individual point of view.
So, when you say monetize, what do you mean? I mean, once you monetize, what do you do with
So,
that?
Titan advertisement you would have seen with Sachin Tendulkar, where they are encouraging consumers कि आपका पुराना सोना लेके आइए और नया ज्वेलरी लेके जाइए. Can we recycle gold? Can we develop gold borrowing and lending mechanism whereby we don't have to send dollars abroad for import of gold, but we can retain that savings in India and utilize this large large gold reserves which we have created. So there will be multiple ways in which we will be able to bring gold locked in Tijori and safe deposit locker into the market, and that money we can then use for investment.
Okay, interesting. So coming back to the Indian markets, right? Okay, you did say, of course, that it doesn't look like India is going to get re-rated anytime soon. So maybe the returns may not be as high compared to what we've seen in the last few years. But still, if you had to talk about some growth sectors, some innovation sectors, some companies that have an opportunity to generate alpha for investors, where do you see the large potential now over the next, say, 3 to 5 years?
So over next 18 to 36 months, consumer discretionary should do well. The taxpayers have money, consumers have money, borrowers have money, and government employees will have money. All this money is likely to be spent and saved. They are unlikely to be spent on roti kapda because that most people have. It's more likely to be spent on discretionary items like airline travel, hotel, tourism, education, preventive healthcare, home improvement, and stuff like that. So, consumer discretionary is a sector from 18 to 36-month point of view. On a longer term basis, like 5 year, 10 year, the world is moving towards robotics. And there are many Indian companies which are pretty good in automobile components and precision engineering. If they can become preferred supplier of robotics component to such robotics manufacturer, that could be again a fairly large market.
Can you give me some examples? Not in terms of companies, listed companies, but just some sectors that can benefit from this.
So any auto component company which is moving towards supplying component to robotics should do well. We have the capability, we just need to become preferred supplier of a size and a scale. One more sector which should do well is related to how we are leveraging AI. Many of our companies have large access to large data, and those companies have access to data. They can put AI on top of it and create solutions. This same model, like our UPI or Aadhaar, then can be replicated in other parts of the world. Some of the Indian companies are top 5 globally in their respective sector, and those are the opportunities. I think last 5 years were far more top down. Market was broad based rally. Next 5 years is going to be far more bottom up. You'll have to pick up the right company, right entrepreneur, and bet upon them.
So, I've spoken to you so much in the past, but I haven't seen you this, I don't know if I can call it bearish, but this despondent in a while. Have I read it correctly?
Yes, uh, I'm optimistic undoubtedly, but you have to read the tea leaves.
Yeah.
And today we do seriously face the challenge not of earnings growth, but of the derating of our market. We so there's this beautiful story of Xerox. Everyone knows it's a successful company, so successful that copying has become Xerox as a brand name. Uh, they had set up a research center in Palo Alto called Palo Alto Research Center to make future, to invent future. And everything around today's digital world has actually originated in Xerox. Graphic user interface, mouse, first personal computer, Alto, modular programming, laser printing. Everything was created, invented in Palo Alto Research Center. What did Xerox monetized? Virtually nothing. They had investment in Apple and they invited Steve Jobs to take a tour of the research center. He came, saw graphic user interface, mouse, and modular programming and Ethernet, and created Macintosh, which laid the foundation for Apple. Almost every company can draw their inspiration from Palo Alto Research Center product. India, in some sense, is like Xerox. We have all the talent, we have all the capabilities, but somehow or other, we don't monetize it enough.
And that's a scary place to be because we all saw what happened eventually with Xerox, right? I mean, eventually the world moved on.
Absolutely.
Yeah.
And which is why it is important that not only what we are doing right, we continue to do, but we also start taking some tough decisions. For example, judicial reform. Is there a way you can stop Bernie Madoff kind of crooks? Answer is no. In India, we'll have enough Bernie Madoff equivalent. What we need is Irving Picard. Irving Picard was the guy who was authorized to recover all the frauds of Bernie Madoff. It was a $60 billion scandal. And in a few years, Irving Picard recovered every single naya paisa. Everyone who benefited out of Bernie Madoff's payoffs was forced to part with money, including estate of the deceased person, including widows of the deceased person, including Madoff family members. And every money was paid back to the investors who deserved it. In India, we will always have Bernie Madoff. We can't escape from them. What we desperately need is Irving Picard kind of person. And we need to create that rule of law. Now, today, judiciary is overburdened. Tariq pe tariq is the norm. And crooks don't fear judiciary, and honest people, honest citizens are afraid of going there. How do we change that? All those things will make a difference. I think our earnings growth is going to come through, but we must work hard to ensure that our valuation remains.
But is it a pipe dream, you think? Because, this is something that we've been talking about for many, many years now, whether it is ending Inspector Raj, whether it is increasing ease of doing business. I know that progress has been done, but not at a pace that the population is growing in. So now we've come to a point where people are starting to get really disappointed when you compare it with, say, I mean, I won't say London, but now I'll say Singapore, Dubai, or, Hong Kong, for example. And you've just come back from
Yeah.
some of those places. So do you get a sense that there is a bit of disappointment in the air?
So, in India, whatever you say opposite is also true. In our building in BKC, when someone comes extra bearish on India, We just opened the curtain and showed them Geo Center and said, look, the world's most expensive wedding happened over there, and your country's HNIs were dancing in Bharat over there. So don't be so bearish. Sometimes we meet people who are more bullish on India than us. Then we take them to the next corner, open the curtain and show Dharavi slum. Saying, देख भाई हमारे यहाँ पे वर्ल्ड की लार्जेस्ट स्लम है. In the same building, I can make someone bullish, I can make someone bearish. Both coexist in 1.5 kilometer distance.
Wow.
So, whatever you say, opposite is also true. And the real challenge for India is not growth. Growth will come. How do we grow at a pace which is better than peers? Governance which is better than peers, so that our premium valuation is maintained. We are the super luxury item. We have to deliver that quality product.
Absolutely. No, India is a land of opposites. I mean, I see it now. I do travel a lot for work, and I see how every place is so different from the other. And the world that we live in Mumbai is pretty much a bubble. I mean, the rest of India is starkly opposite of what
Yes.
we live and breathe in Mumbai. But having said that, coming to what recently has been happening globally, right, with the whole H-1B visa chaos, and with this whole thing of, oh, now the brain drain that has happened, now we have to flip it, and it has to be brain gain. But if you talk to a lot of people who are, say, green card holders, or I'm not even talking about citizens, I'm just saying H-1B visa holders, they're desperate to retain their visas and they don't want to even think of coming back. So how do you think that shift is going to take place? Because as you said, retaining talent is a big issue. Maybe because of lack of social infrastructure, lack of government measures, etc. How do you think that whole system will play out?
So it's difficult to impose yourself on an individual's choice. But undoubtedly, we need to improve our living standards. Uh, I met a mutual fund distributor whose kid wanted to go abroad. And he said, Nilesh bhai, can you talk to him? You are so bullish on India, maybe he'll listen to you. And the kid made me silent with just one question. Nilesh bhai, I want to walk with my kid on a footpath. You show me in Mumbai one place where I can do that. Now, of course, there are footpaths in Bombay where you can walk. But the question was not literal, it was symbolic. And then I said, fair enough, beta, you should go abroad. You will get a much better civic amenities. I think our urban governance is very poor, and it does improve or does increase opportunities of going abroad. You will get a good garden, you will get a walkable footpath, you will get a clean air to breathe. All those things make a difference. And here also, while there are many other things, we need to create Indian thought process. For example, wastewater treatment was not an Indian concept. We got it from Western world. And not only they gave us grant and the knowledge and the technical know-how, they also made us aware that there was a need for wastewater treatment. All good. But the plants which they give were suitable for cold environment. They were energy guzzling to create bacteria to break sewage. All those plants, while we got in grant, uh, didn't really operate because we had power cuts. In Brazil, they went on an anaerobic method of treatment, which is less energy guzzling. They used hot and humid environment to create bacteria to break sewages, and as a byproduct got methane gas. India should have gone for a treatment which was more suitable for hot and humid environment rather than one which was suitable for a cold environment. Now, how do we create solutions which are applicable to us? We need amulization of many products and services. Multinationals were dominating milk and milk procurement business, and Amul made India, which was importer of milk products, to the world's largest producer of milk. And there's no large company in milk. It's just the cooperative societies and millions of farmers working together. A concept like Amul may not have existed in the Western world in the size and a scale which we have created. So how do we create Indian solutions for Indian problems which can work in our environment?
Fair enough. We also spoke about this earlier on our call, where a lot of people are now talking about, is this India's China moment, right? Because when America had imposed sanctions on China, then China went all guns blazing to sort of improve their own domestic ecosystem and then sell to the rest of the world, thereby strengthening their own economy. Do you think India is going through the same, and do you think it can benefit from it in a big way?
So, twice in the past, we have fought against all the odds. In the 50s, 60s, 70s, we were dependent upon foreign food grains to survive. And that's why in those years, Bollywood films, the villain was generally Kala Bazaria or a Sahukar. But once the world stopped giving us food grains, we focused on green revolution. And thanks to Dr. M.S. Swaminathan and many such people, we became Atmanirbhar in food grain production. In the 90s, we had to pledge gold to raise FX loan. And then the whole government and corporate India came together. The IT services business took off, and today we are top 5 FX holder in the world. In both food grain and FX, government and citizens came together to find a solution. It took time, but the tenacity ensured that we became successful. With the same mindset, can we create solution for today's problem? Answer is undoubtedly yes. I mean, Kumbh Mela we organized 65 crore people in a small location. Except China, no one has 65 crore people, so they can't do it. They can't even dream about it. And China will never take the risk of putting all 65 crore Chinese in one place. The government will fall. Only India could dream about it and do it. And we are doing it every 14th year.
Yeah.
The planning, the dedication, the awareness which would have gone towards creation of Kumbh Mela, organization of Kumbh Mela, can we put the same on the economy? Then all our problems will be able to resolve. We need focus, we need attention, we need public-private partnership.
And on the leadership front, do you think that some tweaking is needed, perhaps?
The best part about leadership is the perquisite of my job, I will say, is meeting such excellent entrepreneurs. I'll give you a couple of examples.
Sure.
There's this gentleman who is not even an engineer, but he makes CNC machines which are as good quality on which iPhones can be produced and which are cheaper than many of the imported CNC machines. The tiles industry of Morbi is a perfect example. It has scaled up. It is now competing with global products in not only Middle East but also European markets. And it's not even an organized industry to say. Of course, there are large players, but very few of them are listed. We met an entrepreneur who created the first alloy good enough for next generation turbine for Mitsubishi among their worldwide vendor base. So there are many such entrepreneurs in India. The Luna creator, to make in less than $1 million a voice AI better than OpenAI is not a joke. There are entrepreneurs who have created motors which doesn't require rare earth. Now the whole world is talking about China's monopoly on rare earth. We have entrepreneurs who can make motors without rare earth. Now, can we develop the ecosystem to support these entrepreneurs? Today, so many people have made so much money in stock market. Can you put a part of it as a pool so that such kind of innovations can be supported?
So just to summarize, Nilesh, your views on the market, right? At this point, you believe that the market has run ahead of fundamentals. So there's really nothing that the market has in terms of a very big positive trigger to take it ahead. If anything, we are facing a risk of actually getting derated if the government doesn't step up in terms of reforms, etc. So for a retail investor, don't expect major returns over the next couple of
Yes.
years. That's the moot point.
Moderate your return expectation and follow the dharma of asset allocation. Investment doesn't mean equity. Mutual fund also does not mean only equity. There is REIT InvIT, there is performing credit AIF, there is precious metal. All this needs to be part of your portfolio.
Wow, this has really been a fun conversation. I didn't realize we've already spoken for 1 hour, but there is so much to learn from you. Just to wrap up, right? Because I mean, we are running out of time. Your personal journey has been nothing short of phenomenal. I've known you for like almost 15, 16 years now. I've, watched you grow, and you've been, I think, tracking the markets, in the markets for almost 25 years now. If you had to summarize your own journey of success, of wealth creation, of just consistency, right? What would your two or three biggest learnings be?
So, one, like what I have followed, is a Gujarati poem. Gamtu malye to gunje na bhariye, gamta no kariye gulal. If you got certain skills, talent, you don't pocket it, you just spread it around. Like gulal, when you spread, it makes an environment colorful. So you should spread happiness with whatever skills God has been kind enough to give you. Uh, I work long hours in mutual fund, and from the time where people were throwing us out for being part of mutual fund to now getting accepted, we have really worked long hours. If we had managed our own money, probably we would have made far more money for ourselves. But we are focused on creating far more money for our investors. And that gives you not only the money, but also the blessings. So my first recommendation, काम ऐसा करिए जिसमें पैसे भी मिले और दुआएं भी मिले. The second thing, is keeping client first. In the entire world's mutual fund history, I haven't found a parallel to what Indian fixed income fund managers did. From 97 to 04, my fixed income funds were delivering better return than equity funds. And everyone was throwing cash at us. And the entire fixed income mutual fund industry, me, Navneet, Bala, and Amitabh, and so many others, return money to investors. My own fixed income fund crashed by 95%. It was true for everyone else. We kept client interest first. And that, to an extent, built the foundation for today's mutual fund industry. A lot of equity fund managers had lost reputation in TMT bubble, but I have no hesitation in saying that the client first policy of fixed income mutual fund kind of laid the foundation and goodwill for today's mutual fund industry. Of course, thereafter, there are many legendary equity fund managers which created tremendous brand value for them. Uh, so, always keep your customers' interest first. Your interest will get protected. And third, I'm sure I'm going to get trolled for this, but today's generation talks about work life balance, which is right thing to do. But for one generation, work has to be life. If I hadn't worked as hard as I have, my kids may not have today's lifestyle. So, work life balance is important, no doubt about it. But one generation has to ensure that work is the life.
And that was your generation, perhaps,
For my family, it was my
that built for the
generation.
next few generations.
And for someone else, it could be next generation, who knows. But as a country, one generation will have to work hard.
Yeah, I completely agree with you, 100%. Do you have any regrets in your journey?
A lot of regrets. I wish I would have spent more time with my family. I wish I would have given more attention to my health. But theek hai, that's part and parcel of life. So no real regrets.
But on one hand, you're saying that you should work hard. On the other hand, you're saying that you regret not spending time with your
So I should
family.
have worked hard on my health also.
Okay.
Instead of watching movies or watching cricket matches, I should have focused more on, going out for a jog.
And any mentors or anyone who has really been a guiding force for you? Because I do understand from a lot of successful people I speak to that everyone has some mentor or the other who has
So
helped them.
So I have been very lucky. I have many mentors. There are friends from ICICI Securities days who are far bigger expert and far more knowledgeable than me. For 30 years, I have been relying upon them. And even today, I can lift a phone call and ask them on anything. I have bosses who have been very kind to me. They have tolerated my mistakes. They have helped me grow. And even today, I can reach out to them. There are colleagues with whom I have worked over the years, and uh, you know, I haven't done as much for them as they have done for me. So my whole approach to mentorship is that you know the strengths and weaknesses of people. Reach out to the right person for whatever guidance you require. Uh, if I have to sum up this entire mentorship in just one suggestion, when I met Uday Kotak and I said, "Sir, what do you expect out of me? How should I manage Kotak Mutual Fund?" He said, "Nilesh, there's 2x2 box decision making. The first box is of Bhagwan Ram. Bhagwan Ram was Maryada Purushottam. His goals and his means to achieve those goals were always righteous. So, all your decision making ensure that your goal is right and the means to achieve that goal is also compliant." The second box is of Krishna Bhagwan. Krishna Bhagwan was taking shortcuts in order to achieve bigger goals. So you had to kill Karna. After Karna's death, he told Pandavas that incidentally he was your elder brother, not before. So it's a Kalyug. We are running businesses. Sometimes you may have to take shortcut. In that scenario, ensure that the goal is really righteous. The third box is Duryodhan. Duryodhan's goals were wrong, but his process to achieve those goals were right. While he was fighting for his life on the 18th day of the battle, he didn't go and hit Bhimsen below the belt. Bhimsen hit him below the belt to kill him. But the goal, the whole fight was completely wrong. So never be Duryodhan where you are so focused on process that you forget for what goals you are running that process. And finally is the Ravan box. Ravan ke goal and objectives and means, everything was wrong. Never be in that space. So it was a fantastic mentorship. The second mentorship he gave was again very interesting. I was so passionate about my job that many a times I was very aggressive, unnecessarily aggressive with people. So one day Uday told me that, "Nilesh, you should be a round table, not a square table, jo kisi ko lage. If you're round table, you serve the same purpose as the table, but you won't hit anyone, you won't hurt anyone." And even today, when I'm unnecessarily becoming aggressive, somewhere in the mind that advice starts: round table, not square table. So very small things I have learned from people. I have been really fortuitous that I have so many mentors.
These are really lessons that I don't think too many people get access to in their life, right? I mean, to have a mentor like Uday Kotak is just exemplary, and it's a once in a lifetime kind of opportunity.
Absolutely.
But any other lessons from him that stay with you?
Uh, the lesson about conflict management. He's very clear what is the right thing to do and what is not the right thing to do. And as a fund manager, we face this conflict on a day to day basis. And every time I am in doubt, I've sought his suggestion, guidance. It's been truly exemplary. How to manage conflict, that's something which is worth learning. And many a times, our education has not taught us about conflict management. Uh, we all evolve over a period of time. Uh, in the 90s, when I was working in mutual fund, it was perfectly okay to buy shares which you were buying in mutual fund. Today, that's a crime. But we didn't know at that point of time that it was legal but unethical. Someone needed to show us the mirror on conflict management. So there are so many things which one can learn either with experience or one can learn by listening to such people.
Absolutely. Nilesh, thank you so much for joining us. I will do a round two of this conversation because there's so many more life lessons to learn from you. But today was more about the current state, which is kind of, in a flux for everyone. So thank you so much for joining us on the Money Mindset. And I wish you all the very best. I will
Yeah.
invite you once again here. But until we meet again, thank you so much.
Thank you.